following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I am still in transit back to North Carolina. I'm in Florida in a place here. On the way back, going to be heading back at lunchtime today. And coming back from Medellin, Colombia, seeing my very good friend Juan Villegas. We visited a couple of banks while I was down there. Really huge acceptance of what you're seeing on the screen and the scanner that we've been using and progressing forward with, and actually got some charts in here now. Still, it's probably going to be still a couple little snafus here and there, but I'll show you the S&P chart. I know you guys, if you have this scanner, you've gotten an upgrade. Hopefully by now you've been alerted to it. If you hadn't, please email us. But, we were going through the motions of this product and talking about the breadth. And these are guys who already use, a lot of these traders on these desks had a Bloomberg terminal. They already use a lot of our free products on the Bloomberg terminal. Bloomberg downstreams a lot of our information for free if you get a terminal. But, this was something that, they were actually talking about buying oil yesterday in particular. And I said, look, we're red across the board. We don't have any reasons to look at this. A couple of people are like, wow, it's cheap. It's $29, blah, blah, blah. I was like, you know what? There's not a lot of signals here based on what we're seeing, just looking at the matrix here of a really decent time to start stepping in and buying oil. So, it'll tell you when the indications are there, and we guys, we talk about this on a day-to-day basis, but, for people to have this in their hands to hopefully not miss trades on institutional desks is really what it's built for. And I hope that you guys get a lot of use out of it, trading your own portfolios and on trading plans. I'm only on one screen today, guys, by the way, so I'm not going to be able to see, a lot of the comments in the den unless I pull them up on the screen here. So I apologize for that. I'll probably be looking at comments on the breaks. But, as we look at the breadth, what I was doing yesterday, which I think, it's I don't think it's, Monday morning quarterback. You guys watch this show all the time. And I've been talking about, in particular, the S&Ps relative to other global markets really hanging in there. So I haven't been a big fan of backing up the truck and buying the thing, but it's just been interesting how the S&Ps relative, to the Shanghais, the Nikkeis, some of the other indices out there, especially some of the other ones in Asia, the Thai Set 100. It's on a relative scale has really been hanging in there. And we've talked about some trades, a couple of inflection points that were pretty big, actually. The 1953, 54, 57 area, that was broken. And there's really nothing else really hanging down here. And I want to talk about what we had talked about yesterday in a relatively large bank's office, and a bunch of traders on the desk. And there's that big January 1st weekly crossover along with that daily crossover on January 2nd. And at that point, the tide of the marketplace, Basil coined that phrase so perfectly, the tide of the marketplace really had changed and really started getting into an area where it's okay to be short, not okay to be long, unless you're going to try to start doing some contra trades against this particular situation. Now, what we're showing this morning, the beauty of this product, in my opinion, is, and I don't state this enough, is you get the world's data in a real-time derivative sense for signals for no exchange fees. All right. So we're going to give you this indication of where the market is on a long-term basis and on a short-term basis, even on our breadth charts with our real-time calculation derivatives of those real-time prices. And as you can see over here on our daily intermediate breadth calculations, we've got 362 stocks in the S&P trading below profiles, 39 trading above. This is a very, very intuitive tool that it was really, really cool to see these guys in another country, big traders on the largest Bank Colombia's desk in Colombia, one of the largest banks in South America, really take hold of this thing. I mean, they use a lot of our information on the Bloomberg machine already, but this is something we haven't released there in this manner. And to be able to go in and get into, Mexico, hit that, boom, here we are. Here's the same turn the wrench the same way situations here, and you can pull up charts. Going into Colombia, being able to pull up, what stocks are hanging in there in Colombia. Colombia's actually kind of turned a little bit here. And yesterday we were trying to find stocks that were kind of raising their hand and showing that they don't want to cooperate on the downside. It was real easy to see without actually having to go to the charts. Some of these holdings in Colombia, one of the ones that we looked at in particular was, which one was it? I think it was this one, Banco Davivienda. I know it was like, I think that was the one. But anyway, we watched it. We monitored while we were there. It's very interesting to see the faces that have never seen this product before. But going back to the breadth situation, I'm gonna have to check my clock here because I can't see it. All right, we went over this. We went to the Shanghai and we started looking at the breadth on the Shanghai. And we started looking. We got a little bit of got our data mixed up there. But what I wanted to do is show you that back in 2014, July 2014, basically when the Shanghai took off and went from this negative connotation to our positive connotation on our breadth, we basically were in that frame of mind until we had a crossover here. And I'm sorry, we've got some data mixed up this morning on the Shanghai on the tail end here. But until we got into this June 2015 mode, we were in long mode on long-term breadth on the Shanghai, and that coincided to some degree on our daily. I'm gonna have to go back and we've only got this back so far on the daily, but as we look at this crossover that happened around June 2015, then it was okay to be short, not okay to be long. And again, I apologize for that data being missing right now this morning on the Shanghai. I'll notify some of our tech guys about that. But this is a long-term tie to the marketplace type indicator. And going back into our world that we usually live in the S&Ps, we had that situation happen in a pretty large way on the first of the year, but we actually had hints of it happening. And I'm going to show you this here, barely across into positive territory the last week of December. That similar situation provided a little bit of a trading opportunity the last week or so of December on the intermediate side. But when these things line up and both of them cross over to negative, it's a pretty damning situation. And that tie to the marketplace, let's see if I can stop that there, is something to pay attention to always. We'll be right back from the break, guys, and we'll pick it up after that.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Yeah, somebody mentioned in the den that Columbia was hanging in there as far as one of the only indices out there. If we go to our heat grid on our look at our 4-hour, this thing started to turn actually on the 1 hour pretty quickly day before yesterday, and it was interesting to watch that while I was in the office of that bank yesterday morning, and just kind of show them kind of a relative strength way of looking at some of these global marketplaces. It's pretty damning as far as the Nikkei just got hammered. We're going to look at that chart in just a little bit here. But one thing I wanted to show you, a couple of new features in here. Very proud of this thing. Again, these charts are not meant to be the end all for all charts. They're meant to, not break any exchange rules for outputs of real-time prices. But these are our display and of that, as best as we can without breaking any rules. And this has been clarified and kind of lawyer stamped by the Bloomberg people. So I don't think we're doing real-time price derivatives. We're not doing any real-time pricing. So if you look at the S&Ps, you can get a pretty clear snapshot of what's going on. You can get the levels if you can see those up there. And let me make sure everybody's seeing my chart here. Sometimes I show things that aren't there. And you can get those levels. If you mouse across to the right, you'll see that 1832 bottom of our 60, 1848 top of our 60. There's that 4 hour. We did poke our head above for a little bit of a trading opportunity yesterday. In fact, actually, it was pretty short-lived. That was this kind of stop-orient situation. And we also had that orange bar appear in the heat cell grid. I'm sorry, let me pull that back up. I'll show you. We had a little bit of a yellow peel back happening there when that trade was over, but I was kind of amazed. I mean, this 240, we always talk about the regulation of the trade one way or the other, and this 240, after we gotten past that 1954, 1957 area, and even sooner has really, sell resistance, sell breakdown, sell resistance, even though this has been a relatively strong index relative to the rest of the world. I was a little bit less bearish on this than, and I still am. I mean, I think we've held up relatively well in the global carnage that's happened lately, but we had a little bit of a breakage of the rules yesterday, getting back above that 1888 area provided a little bit of a trading opportunity. I think we got as high as 1907 or 6 or something like that. Let me see. Yeah, well, we're not going to show you those prices up there, by the way, but shows you the visuals. And now we're kind of back below profiles. All bets are off. The long-term breadth is negative. And what do you do with this now? What I'm going to do is I'm going to pull up the S&Ps here on eSignal really quick. Okay, we lost our chart. Let me try to reset that. Check the DIN here. Okay. So, what do you do with this now? As we looked at the scanner and as we looked at the breadth, I mean, the only time that, and this is our 60-minute on our eSignal. Let me go back to our scanner. You're going to see the same thing. If we go back to our 60-minute, really the only chances you've got to nibble on this on the long side here, if you're going to trade against the long-term trend down, is getting back above 1848. That would be kind of a breakage of rules. With what's going on in the globe, I'm a little bit hesitant on shortening the hole here because we could have some snapback rallies based on, some kind of government intervention statements that might come out, especially in China. So it's kind of a wait and see, in my opinion. If you're short, there's really no reasons to take off the shorts until we start having some breakage of rules. We do have, as of yesterday, we had some, quite a few new demand areas attempting to be put in by our daily grid. I just want to make note of that. That's what that yellow section is right there. But again, we've got some more fundamental news out this morning. That was a hint to take some weight off, by the way, at bare minimum. Remember, that's almost like a yellow peel back happening on the future itself. But right now, this morning, I think you got to let things shake out a little bit and start breaching the top of some profiles if you're going to trade anything from the long side. That being said, as far as the S&Ps go, that being said, we're going to take a look at just doing some very simple sorts here. And let me see here. Okay, so what I did is I wanted to see what was really still hanging in there above profiles. Excuse me, above profiles. Peak D, I will try to do that. Let me want to see what's kind of hanging in there above profiles. I also wanted to do a sort. Let me go back to my dashboard here. I also wanted to look at breakouts. Some of these stocks had showed some strength yesterday. Obviously, this morning we're going to have to wait for some data to come out. But some of these stocks are hanging in there, so to speak. Some of the things going on in the ETF section. And I was looking specifically at energy yesterday. There were some instruments hanging in there, all right? And we looked at COG, Cabot Oil. Let's just take a look at this again. Obviously, it's not open this morning yet. But, this is one where, crude oil makes lower lows. Some of these oil stocks are not making lower lows, and they're actually making higher lows. So some of the ones that you want to pay attention to, if you're going to try to nibble on crude oil, it might be a lot easier to go into the scanner and try to find some things that have kind of been hanging in there. EQT, Cabot Oil, and EQT and Cabot Oil. That's what we're looking at here. You could let's just take a look at Cameron International. This is one, obviously, that's been making lower lows on our daily lately, but if you look at the weekly, this is one where we get back above 61.84, we might be back in business on this particular stock. We're trading a little bit below there right now, but again, you want to look at, this is our long-term view. You want to look at stocks. This is a stock obviously making higher lows. Oil's making lower lows. These are the type of situations that are going to be as the least painful if you're wrong and you try to start nibbling on some of these oil stocks. If oil starts falling apart again, these are the ones that hopefully won't be as painful on the way down and theoretically should pop higher if oil starts to show any hints of moving north. Yeah, I've been looking at the XLU Peak D. I'm just trying to catch some comments in the den when I can here because I only have one screen today, but hopefully back in the saddle this afternoon in North Carolina. Yeah, I want to go back to the ETF, something that Pete D just said. The utilities have been strong. They've been hanging in there on every level during this carnage. This is a place we talked about people hide in general, and there have been some decent plays here. You've got something that's kind of coming up into resistance right now, EIX. I'm going to pull that up so you can see it. This is one where here's our daily, here's our weekly. It's showing top on both, or excuse me, it's showing 2 inflection points, bottom and top. So this is one that's got some resistance right here. It hasn't been really, it's performing as well as some of the other utility stocks. Is something to keep in mind. This may be actually something, a weak utility in a relatively weak market. We'll talk about that when we get right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We are getting ready to get our charts back up in just a second here. And we're going to do it right now. How about that? A little less real estate than normal today, guys. Still in a transit mode back to North Carolina. This is our S&Ps. We talked about this. Just wanted for guys joining us late. We talked about that 1848 being a big number. We'd have to just kind of start getting on our horse past that area for me to start looking at this for any type of bounce long situation. But right now, that's something we want to just kind of wait and see on. This is not something I'd be stepping into large this morning. Here's our currency, the U.S. dollar, and let me go back into the scanner. And I hope you guys are seeing this. Al, if we're not, just let me know, because I know switching around charts here sometimes it doesn't show up in the den. We have you. Okay, cool. All right. So as I look at the dollar, this is our U.S. I'm sorry, that's a Canadian dollar future. Excuse me. Dollar index. Here we go. So I'm showing the chart here. This is our 1 hour. Obviously, the currency that's been holding up super, super good. This is our weekly. Not going to get a lot of data there because we're going to switch to some continuous charts, by the way, on the U.S. futures and U.S. Treasuries. Starting in a couple of weeks here, we're just going to go to that mode because the rest of them we're going to have to stay with the raw contract. But you're going to get a little bit more data on our weekly there, and that's where we're headed with it. So right now, this is the situation on the U.S. dollar. There's really nothing, in my opinion. I'm going to go to our e-signal for a second here and show this. We talked about the this particular area, 99.37, being some kind of target-rich environment for this. I like the way this is crowding above. I think we're going to probably have a weekly close this week above 99.37, and that's going to cause me to look at that as support up into the next level up, which is going to be 170 on this March contract of the U.S. dollar. Somebody had asked to take a look at the Chinese currency, and I'm going to go in here, and we're going to see if we can pull this up on e-signal. We don't have this in the scanner, but I will make note of it. If you could send me an email, that would even be better, to put the CNY USD, and we're waiting for that to come up. We're going to have to come back to that. All right, we're going to hit a couple more usual suspects before we go back into the scanner, and we're going to take a look at something that just came apart at the seams here. This is the Nikkei, and the latest breakdown, as you can see, 18,475. I'm going to go to the scanner. I'm going to go back to our indices section, and I'm going to go down into the Nikkei, and we're going to take a look at these breadth charts really quick on our long term. And again, going into that 1218 area, as you can see that, let me blow it up. This is our long-term breadth. This is our weekly. I'm just going to kill the middle ground here. The last long-term crossover we had was 1218. All right, so that was okay to be short, not okay to be long area, and we had that crossover to green on the long term. Remember, these are for long-term investor type situations to really either go to cash, buy the hedge, or reverse the position to short. All right, so those three areas, back in October, we kind of had the long-term tide change. And then we had that big change over around December 18th. On an intermediate scale, we've had some trading opportunities, obviously, within that particular scene that we just talked about. But I'm a big fan of these weekly crossovers to really start looking at the market long or short. And the Nikkei, the last crossover was around 1218. And what I'm going to do is I'm going to go to the Nikkei chart, if I can, go back to my futures section. And I'm going to look at the Nikkei here. So I'm going to pull up a Nikkei chart, and that is 1218 right there. When that bar hit right on this is our daily chart. When that bar hit, we had a change in tone, and we also had and I'm going to go to my weekly here. There's December 1218. They're right in there. We had the tide of the marketplace change, but we also had the confirmation, a big confirmation happen that the first week of January. So I'm going to go back to my e-signal chart here. And there's that first week of January. All right. So we had the tide change before we broke long-term profiles. When we broke long-term profiles, that was kind of your double confirmation. So again, I hate to look back in history and say, oh God, you should have done this, but we have an hour every day, and we try to cover a lot of the US stuff, but this scanner allows you to really cover the globe in a real-time sense now and get a chart to boot. So as you go back to the indices section, you can take a hint look at Hong Kong if you want to just see what's going on. These are going to give you real time. This thing got dismembered today over in Hong Kong. This is the Hong Kong internals. These are the Hong Kong internals. As you can see, nothing escaped. This is just carnage, big time carnage. You'll see some areas that are still sitting, China Overseas Land Investment Limited. You'll see these things sitting at their inflection points on the weekly. So if you're going to buy Hong Kong stocks, this may be one to look at now. You're sitting right on support in a situation that looks just extremely ugly. We've got 1044 here. This is something that didn't make new lows today on the daily, but obviously has been getting hit on the weekly. So you get the picture. So you can kind of get a tie to the marketplace breadth change situation, and then look for anomalies that are happening, relative strength or relative weakness within the index if you're looking to trade a lot of things overseas. And this is extremely attractive to the institutional guys because they can go in and get a real good sense of what's going on the landscape of some of these products, or some of these exchanges or indices. So that being said, in Colombia, as you can see, really weird how I was there. I'm just a shining beacon of a light. It's just, when I go places, their stock market goes up. My email, and I'm just able to look at the den every once in a while. My email is jlogan@tasprofessional.com. And I think that's on the TFNN website. So if you just send things in, what I'm going to do is I'm just going to pass them to our tech guys, and they're just going to make some changes and add some currencies here or there. And again, we've got the usual suspects of the currency world here already, in my opinion. But and we're going to take a look at one of my favorite trades while we're over here, by the way. The Canadian dollar. Man, this has just been... this is the devaluation of the Canadian dollar. I'm looking at it in a kind of an inverse relationship. But if you look at this, not a lot of reasons to have taken this trade off. This is our charts. And again, we're giving you some snapshot charts here. These update about every 60 to 100 seconds. I feel that's very appropriate for what we're doing on this show. If you're day trading also, that's, it's nice to have these levels. I want to show you guys while I'm thinking about that too. Let me see where we're at time-wise here. Got about 5 seconds before break. I'll tell you what we're going to do. We're going to take a look at something else that's very near and dear to my heart when we come back. This is another charting package that we're working on. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that
many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and I'm going to show my den chart here. So we're kind of finishing up with the Nikkei. I was talking about a lot of topics earlier. Fact of the matter is, a lot of these indices, there's not a lot of reason to step in yet. We don't have any of our normal indications on our scanner to start looking at a lot of these. I'm gonna go back to our futures section of the scanner. We've got charts in here. If you guys haven't gotten a demo of this, please get it. I think you'll enjoy it. But if we look at the Nikkei, and where are we at here? There's not a lot of reason. There's no yellow peelbacks going on our cells here on any time frame, and our breadth is just about as bad looking as possible. What does that mean? That means that if we go into our index section, we go into the Nikkei and we look at it in the seller on a couple of time frames here. This is an indication. If you look at this, and I'm going to pull up our breadth charts on the Nikkei, 225 stocks, 211 of them are sitting below profiles. All right, you want to see something. You want to see new boxes attempting to appear below here. I know this is overextended, but this was overextended the other day too. So let's take a look at just allowing this to show some new demand areas start to happen on the Nikkei before anybody starts nibbling here. And there's obviously some people freaked out over there about China. China's kind of the barometer of what's going on right now, so we got to pay attention to it, and got to get some decent new news from China that they're going to start rigging their markets like we rigged ours. So that's kind of what we're waiting for. Something else I was going to show earlier. We put a chart in our scanner. I hope you guys it's again not to break a lot of exchange rules and just give you some visuals relative to the profiles. I've sincerely liked having that capability. But here's a package that we've been working on for a while. It's a little bit more in-depth charting situation. It's got a ton of features in it. It's like a big, regular charting package that you'll get off of, Interactive Brokers. It's actually nicer than that. So this is something we've got going in the background. We want to release this also, but for now, just to kind of have something as a visual in the scanner, we put these snapshot charts in there, and I think they serve the purpose of what they're supposed to within this type of environment. That's a much more involved program. And again, another thing too, I was telling Juan yesterday, we were at the Columbian Bank, and I was we did a couple of custom sorts for them that were uptrend support, starting to show some things, and we were just kind of flipping around with custom sorts and doing manual sorts, and it's really weird. Once you get hip to this scanner, I really don't need charts really anymore. I mean, I look at these color schemes and I say, okay, well, I did a custom sort. Maybe I wanted to see stocks that were, let me just do this. I wanted to see stocks that were trading below and then maybe starting to trade above on the 240s. that obviously kind of gives me something that's doing a little bit of a key reversal situation and starting to break trend above profiles that have been just kind of edging down. But if I look at this and I go into even, let me just pull this out here. Let me start with something like this. Downtrend resistance. Okay, there's obviously a lot of stocks that meet this criteria that are in a downtrend that, or uptrend that, or excuse me, a downtrend that are meeting new resistance areas, not breaking down, but just meeting new resistance areas. I'll look at these color schemes and I'll right off the top of my head, I'll start saying, okay, well, I think this color scheme looks attractive because I know that we've been in a downtrend on the daily for 8 days. We're coming back up into, excuse me, or we're getting below our weekly, and we're also starting to poke our head above our 240. This is something that I'm not exactly interested in selling. All right, just by looking at those 3 colors, I've already kind of baked it in my head that that's not the most attractive thing I'd like to see by just looking at the sells. Conversely, if I'm looking at Ralph Lauren, this is something that does look very interesting to me because I've been in a defined downtrend on our 240s, regulating this trade down for 47 bars. I'm coming back up into the bottom of my profile here on our daily, and the weekly's been trading below profile. So again, this has been a weak stock in a market that's been going sideways at best lately before we started having the massive sell-off. And this is something that, is kind of meeting the criteria that I'd like to see. And I didn't have to really pull these charts up to kind of get a flavor of what that meant. So again, I'll do custom sorts. I'll start doing some manual sorts, and then I'll look at what's left here. And it's easy for me to see, just because I've gotten used to this, of what's attractive to me. All right. This is something that's probably not that attractive to me. Duke Energy. It's in the utility sector. We've got a lot of green shoots on other time frames. Even though we are coming up into a resistance area, this is one that I'd stay away from. And I didn't have to pull up the chart to figure that out. This is the utility sector. It's a strong sector. We're coming up into it on a resistance area on Duke Energy. But again, I don't like this. This is not the weakest stock in the world to sell resistance on. And by the way, this is a filter that you probably wouldn't want to use in a market like this. You want to try to find stocks that are in an uptrend but coming down into support, because if we start selling resistance stocks in the hole right now, obviously that's a little bit of a relative weakness game. That's a really good relative weakness game. But if you're trying to find things that are holding their hand up, that have been in an uptrend, that are coming up or coming down into support, you've got 4 candidates here. And looking at this one, Scripps Network Interactive, I'm just going to pull it up. Here's our landscape chart. See that? That's kind of the definition here. I'm going to come in here and look at my chart. And as you can see, we pulled back yesterday, but the chart's telling you, just like the sells are telling you, that we came back down broke out, came back down into support there at around 51.84. And we've also, on a relative strength basis, again, this is something that's finding stocks that are in an uptrend that are coming into support. We've made higher lows here as the market's been doing what it's been doing. And this morning, I don't think we've got a print yet. No, we don't. But this is the type of thing, you want to try to find stocks that are showing themselves. And this little filter we did here with this definition, you can pull up and kind of see what the patterns are. Abbott Laboratories. Let's take a look at this one. That's our daily, excuse me. This is our weekly. Abbott Laboratories coming down into support. We've made higher highs. Excuse me. We've made lower lows in the stock market, and this thing hasn't made lower lows. I'm sorry, guys. I've got one screen here, and it's a pain in the butt. People that I know I'm doing a show from 8 to 9. I'm sorry about that. Excuse me, guys. Let me try to stop this. Sorry, guys. I think we've ended that. So Clear my screen. Again, got one screen today, guys. Apologize for that. I'm in transit. We'll be right back. We're going to cover the last couple of things before the end of the show.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We were talking about the scanner and being able to pick the right filter in the right time. I mean, if you're looking, if the market's going straight up, you're obviously looking for, this is what my plan is a lot of times. I look for stocks showing themselves as weak stocks. If the market's going down significantly like it is right now, I like to try to find things to hide in, to try to buy. And if the market keeps going down, those are going to cause me the least amount of pain. I always look at things relative to pain, and I don't know if that's just a product of my general life, but I really don't want to be in a situation, me personally, that is going to be stressful when I'm trading, because when you put stress into trading, it twists things. I mean, a lot of guys that's why they have, by the way, the the head of the trading desk. The head of the trading desk and a lot of these institutions, they don't even get involved with the markets. They stand back on the hill like a general and let the other guys in the kind of in the battle swing the swords, and because they're not in the stress environment and can make very objective market calls. All right, that's the way this thing usually works the best when it comes to teamwork on some of these desks across the globe. So when I look at these situations, I want to be in a relatively stress-free environment, and looking at selling stocks in a downtrend resistance right now is probably not the best filter to pick. I was just showing you that. The one that's really going to kind of be the shining light for me is something like uptrend support in the scanner, or breakouts, or situation. I mean, there's some breakouts. I mean, that's pretty amazing, actually. Strong uptrend. These are the ones that I'm looking at, that if the market, and a lot of these are utility stocks, and I understand these might not be the flavor of the day if the market just rallies like crazy, but we want to try to look at stocks again, in my opinion, in this environment, that are holding up and showing themselves, as nobody wants to sell them because there's no reason to sell them. Let me check our DIN really quick here. Okay, about 2 minutes. All right, I'm not able to look at the DIN. Let's see here, GLD, if you have time. Okay, we're going to look at gold. I think somebody else is asking about the XLV. I'm sorry, I can't catch everything today, guys. I'm still in transit, don't have any real estate. By the way, I want to show you something kind of cool I just got from South America, which is probably not good for Bloomberg. I'm showing it on my screen now. 2 people using Bloomberg, dumping it for the scanner. They feel like they don't need the Bloomberg terminal anymore. That was kind of a good thing to see there. So we're going to take a look at gold really quick. And please, nobody call Bloomberg that I said that. We're going to take a look at gold really quick. And, the big deal here is that 1104 number. In my opinion, gold should have gone a lot higher than we've gone now. We've had some great trading fences here to lean against on the 1104 area, and we also have been talking about this 1090 area. All right, that 1090 area is being that former unfair low on our daily, combined with some 240-minute information. So right now, the big number is going to be that 1104 number. I'm going to go back to the scanner. I'm going to go back to the futures section. God, I love this thing. Go back to the futures section. I'm going to look at this. I'm going to see we have crossed all the borders on everything except for that weekly big resistance at 1104. Now, if you believe that the markets are oversold and they may turn around, and talking about the stock markets, and gold may relax off of this, you've got something to lean off of here. And I'm going to go to my weekly, and I'm going to show you this. That's where we're at. Here's a daily. We're above profiles here. We're above profiles on the 240. We're above profiles on the 60, but we're coming off that big area, and we hit a high today already of, what's our high today? 1103, and we've backed off $4 or $5 an ounce since then. Remember, guys, 1104, big number on gold. Thanks for joining us today. I'll be back at my normal desk tonight, and we'll pick it up again tomorrow. Stay tuned for Larry and all the other hosts on TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.